All right, good people. All right. Let's go ahead and get it started. Today is March 17th, 2021. Thank you, everybody, for tuning in. Welcome back to the Ty Trades Futures YouTube channel. Today is another fantastic opportunity. A great Wednesday, a lot of action coming up. We know we have the Fed meeting coming out today at 2 o'clock p.m. Eastern Standard Time, followed by the press conference that comes after at 2:30. So we'll have a lot of action going into the close today, and that should be interesting for this morning session because based on what people think will happen later on in the day, they could potentially start setting up their positions during the morning session. So it should be a lot of action today. Definitely will be a whole lot of volatility. So if you're not prepared for that now, it's okay. We have 13 minutes to get ready for the market before it opens. So we'll make sure that you're up to date before we even get to that opening bell, and that you have a plan ready and established to run from and work for. So let's go ahead and jump straight into this analysis. Go ahead and pull up the ES chart, the S&P 500 futures. And also one more thing, make sure you guys let me know what's going on in the chat. Tell me what you guys are trading throughout the day. Tell me anything that you see on the chart and interact with me over there. And anything that you want me to look at, I'll look at it for you on today's session. So drop it in the chat if you need to. So looking at this S&P 500 chart, just from a longer term perspective on the hourly. Well, actually, you know what? Let's start with top down analysis. Even though we know that the daily chart hasn't changed all that much, since yesterday, we still need to look at it because it's not about whether or not it's changed. It's about building the habit. So even when we know we don't need to, we still do. So we actually have an interesting scenario right here where prices came back and tested these all-time highs at 39.58, right? And they pushed above it with a wick right here, little small wick, very small, right? They pushed past it, but look at where they closed at. If you follow the body all the way to the left, it lines up with the top of this wick right here. So prices were never able to close above the all-time high. And ever since that point, we've seen bearish activity. Now, mind you, this candle that touched the all-time high represents a Doji candle. So a Doji shows indecision in the marketplace. So in order to figure out which way traders are leaning, you want to see exactly which direction the market pushes prices after a Doji candle forms. So when you see a bearish candle form after that, especially on the daily, which we know is a significant time frame, that indicates that sellers are definitely starting to step in. Now, mind you, the overall trend is definitely up, but we will have pullbacks from time to time. And if it's going to be a pullback, the most ideal place for a pullback to happen will probably be the all-time high. So just keep that in mind going forward into today's session, and let's break it down to the hourly chart so we can get a more detailed view of exactly what's been happening. Now, let's start over here from this top on March 11th at 1 o'clock. Now, we made this top and we pushed down. We pushed down to a previous high. That's a good thing when you're in an uptrend. When markets pull back in an uptrend, they're supposed to come back to a previous level that used to be a high, and then they bounce off of those levels, make a higher low like they did right here, and then they continue moving up. We saw the same similar scenario right here where prices pulled all the way down. They retested the bottom that they came from previously, and then they made their way back up. They made a higher low right here and then continue pushing up. So really, it just looks like we're in a pullback for the moment where we made our initial top up here, but since that point, we've made a lower low, a lower high, a lower low. Well, not a lower low. So let's start over. We made a lower low, a lower high, a even low, a lower high, and then a lower low. So we should be expecting a lower high anytime soon, and we should expect those levels somewhere around 39.47, 39.45, 39.42. So we'll actually zoom down to the lower time frame so we can figure out which price point exactly we want to use, because it's a big zone from 48 to about 39.40. So I don't want to leave you guys hanging. So let's go ahead and drop down to the 15. But one thing I want to point out, If you look at the chart just from a logical perspective, starting from March 16th, yesterday morning at 10:30, ever since then we've been making lower prices, lower lows and lower highs. We've been moving to the downside. And most recently, we've had this extended move right here from 39.50 all the way down to 39.35. Now, that's one of my favorite signals on the chart, because usually when you see a bearish move like this, it's followed by a second wave to the downside. All you have to do is find a level of resistance that's going to act as a barrier for buyers and not allow them to push prices above it. And when you see that barrier starting to form and starting to hold up, then you go short off of those levels and take prices back down to a new low or to whatever areas you're looking at on the chart that you find important. And as we can see, we've kind of had that type of activity so far, where we pushed all the way down back into these levels at 35, and then we pulled back and we retraced up to 39.41. Notice how if we follow these levels across, they line up with a wick that used to be a potential reversal. Mind you, this was a complete red flush to the downside. This was the only candle that tried to do something, where buyers stepped in and said, hey, maybe we can push prices up from this 39.40 level. That's the last attempt that they had, and the highest price that they could reach was 39.41. So that means that 39.41 was the area before where buyers got turned around. So when prices start moving back up again, where as sellers should we expect prices to turn around once more? Well, we can definitely look at the first level that prices made before in the most recent history, and that's 39.40 over here. And look at where prices come back to. They came all the way back to that level. They tested it though. They weren't just going to turn around immediately. The sellers and the buyers had a fight over here. That's why you see this consolidation period. But throughout all of these things, remember, this is a 5-minute chart. So this lasted for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 for 50 minutes. So for almost an hour, buyers and sellers were going back and forth between that 39.40 level. But if we look at it, we can see that the buyers were never really able to close above this previous wick from the first time that they tried to move prices up. So after buyers finally realized that, okay, we're not going up from here, sellers stepped back in. They pushed prices below that consolidation zone that the buyers and the sellers made, and then they continue pushing prices lower. So we should expect prices to either come down and retest 39.35, which, I mean, it's only 2 points away, so that's probably more likely than not. And then we should expect prices to continue moving down lower, and then we'll repeat the process and look for the next level of resistance. Based on what we're seeing, if our low right now is 39.35, then that should be an important level that we can take a short trade from once prices break down below it and then come back up to retest it on the retrades back to the upside. So that's my plan for today. It's hard for me to say that we're going long. I mean, like, even though the overall trend is up, we definitely don't want to get caught trying to go long in the pullback. That will destroy you as a trader, and that's not what we want. If anything, I don't think prices are at a major level of support right now. It's at a minor level because we had support right here at 39.40 over on March 15th, and then it acted as resistance before on March 11th. So it's not like this level hasn't been tested. It has, but it's only 2 touches throughout the history of this chart. So in terms of importance, it has a little bit, but not a lot, which means that prices could still run right past that level. And honestly, in my opinion, prices still have room to move back down to 39.25, or even come back and test the bottom of this wick at 39.13. So we always want to keep that in mind. And based on the price action that we're seeing, is not anything indicating to me that sellers are stopping anytime soon. But nothing is ever confirmed completely until the market opens. So we'll have to see how the market reacts in about 4 minutes when the open does come. But based on what we're seeing, man, it's definitely looking very good for the selling side today. So we'll keep that on our minds. Let's go ahead and look at the live chart. So yeah, man, it's not looking good for the buyers right now in this moment. So buyers, you really can't go long until prices break above 39.40, honestly. And even then, you're being a little bit risky and a little bit aggressive, because these markets can move extremely fast. A lot of times they move faster than you expect. So you don't want to get caught on the wrong side of the move, because by the time you realize, I don't think I should be in this trade, it's too late. The market has already moved. It's hit your stop, or it's almost close to hitting it. So just a note to keep open. And also, before we get into the market, I wanted to go over the dollar Swiss pair for you guys. I was talking about that last night. Now prices are back above 92.75. That's a good thing. Remember last night on the stream I was telling you guys that we need prices above those levels, right? That's our first signal. And then our second signal would be if we see higher highs and higher lows established above 92.75. So in order for that to happen, we need prices to stay above those levels, and we need to get the higher highs and higher lows. So we're not all the way good on the long trade for dollar Swiss just yet, but the setup is looking very nice. If you look at it on the daily chart, it's looking kind of promising. We had a pullback. Coming out of this pullback, we've technically either made, depending on how you look at it, you can either consider this a double bottom or a higher low, because technically this low was made at 92.44. This low was made at 92.30. So in my opinion, yes, that is a higher low. Now let's see if we can get prices to move up off of those levels, or if it's just the last attempt by the buyers to stop the sellers from taking back over. So we'll keep that in mind as well throughout the rest of the session. Let's see if there's anything else that we need to look at. Bitcoin, of course. Bitcoin is still facing a little bit of pressure to the downside, so it's not quite time to get into that yet. Still has a little bit more room to run. If prices break above 57,000, we should be good. Or if we see just a whole lot of bullish momentum and higher highs and higher lows going into those prices, then we'll also be okay. So trading demo today, still trying to get my groove back. Now, if I feel like I'm doing well today, then tomorrow I will definitely hop back into the live account. But even though yesterday went well, I still want to follow it up consecutively and be able to do it 2 days in a row, because that right there shows consistency. Being able to do it once, it's okay. But if you can do it twice, 3 times, 4 times, then you're really good. So if we have a good session today, we will definitely be back on that live trade tomorrow, getting it in and putting some real profits on the line. You know, it's a whole different game when we go live. So tomorrow should be very, very interesting, to say the least. So let's go ahead and move over to the S&P. Let's auto fit the chart. And as we can see, so far markets have been extremely choppy. But remember, today is the morning before the Fed announcement. So sometimes in those situations, markets could just kind of consolidate until the announcement comes out. So let's keep that in mind as well. But based on what we've been seeing so far, this market looks like it wants to trend. We've already had a huge move to the downside, a huge push back up. We had a triple top at these levels, lower lows, lower highs, and so far we're moving back to test the daily lows at 39.35. So let's see if we break that on this opening drive to the downside. The day is open, people. All right, cool. Let me play some music. Okay. So remember, when the market opens, we always want to sit through the price discovery period. That's the point where buyers and sellers try to figure out which way this market is going. So we want to give it a little bit of time so we can also figure the same thing out. And then once we determine the direction, we identify which way the trend is possibly going to move. Then that's when we start looking for our levels and we strike when the iron is hot. But so far we see the buyers are trying to come back and answer the move that the sellers initially had. But Come on, man. The trend is down, so I don't necessarily expect bulls to be successful in this attempt, but you never know. So that's why you always have to let the market do what it does. Don't try and anticipate. Just react. Now let's see if this level can be broken through. I highly doubt it, but you never know. Now, if we see this level hold up, which it has so far, if we see prices close down towards the lows for the day, then that's definite confirmation that the sellers are back in motion. Because think about it, the sellers initially had a move to the downside as soon as the market opened. The buyers tried to come back and undo it. The sellers said, nah, man, that's not what we're doing. We're going down. And that's where we're at right now. We're making new daily lows. So if anything, I think it's still a little bit too early to go for the short. If we were going to go for the short, we should have did it up here at 38, but it was too early in the market to determine whether or not that level would hold up. So that would have been a riskier trade for me, and I'm more of a conservative trader. I want to trade when everything is aligned for me. But it's good that at the open we saw that push to the downside. That's telling us that the sellers are definitely in here, and they probably have a good chance of taking over this session, just based on how we came into the pre-market. Whenever you see a move like this on the S&P, be prepared for more downside. Same thing with the Dow Jones. That's where I learned this strategy initially from. And as we can see on the Dow, prices are also dropping a little bit as well. Not as much as the S&P. Dow Jones is still positive for the day. S&P on the other hand is taking a whooping right now, so that's interesting. We know the correlation between these two pairs is very strong, but on some days they can go in their own direction. I think I was telling you guys about that with the NASDAQ the other day, where 4 times out of 5 these pairs move in the same direction, but on that one day when they don't get caught up in it trying to trade the correlation and be dead wrong. Trade what you see and not what you think. Look at what you see on the chart, observe first, and then think about what you want to do after you've made your observations. Don't come into the market with a predisposed idea like, look, I am going short no matter what. Because then you try and force yourself into certain positions because you're thinking before you see what's going on. See what the layout of the market is, see what their environment is looking like, and then make your decisions. So right now we pushed down to a daily low of 39.32. Now right now we're just looking for a pullback. Now one thing I've learned is that when the pullback is strong, you usually only get one candle to get in, at least on the 1 minute in terms of a pullback. So I don't want to be too aggressive right here, but I definitely like the potential to the downside. Remember, our major key level below is 39.25, but first we have to get through 39.30. I'm just trying to figure out where I should short from to get the best possible prices. But I'll be patient because it's no rush. Today is going to be a day that's jam-packed with opportunities all across the board. Not only in the morning session, but also in the afternoon when the Federal Reserve makes their announcement and they have their press conference at 2:30. So it's no rush today. Anything that you see, man, just take it in stride. We know that the trend is down. We know we can capitalize on that. We just have to wait for the pullback. It's not a matter of if, but a matter of when. So right now we're seeing volume pick up a little bit, which represents that exhaustion is coming into the market that usually leads to pullback. So let's see what happens at this junction. Now, most of the time a pullback does ensue, but if that pullback doesn't happen and prices keep moving down, that's definitely a sign to hop into the market for the short. Because if there wasn't enough exhaustion on this candle to stop sellers, then that means that they have way more strength than we thought. But we're seeing the pullback right now. So all we have to do is wait for the levels of resistance to be touched, and then we see prices move down, potentially make a lower high. But we don't always need that. If we see strong movement coming off of a resistance level, we don't have to wait until a lower high is made. We can be aggressive on that one. So it looks like that was the pullback right there. Prices just pulled back up to test the body of these candles right here, which lines up with this wick from previously. See, I didn't even see that one. Sometimes you really have to study the chart in amazing detail. That time I missed that one. So that's interesting. That's why wicks are so important, by the way. I know a lot of times you see me on the line chart, but notice how I always click back and forth. That's because even though the wicks kind of throw you off in terms of direction, that's why I use the line. The wicks also tell you where you could potentially catch the best trades, because sometimes those wicks act as great support and resistance levels, as we've just seen right here. So let's see if prices come back and touch that level again. Based on what the trend has been, I highly doubt it. And I'm thinking about taking a short trade right now. So I'm going to go ahead and put my order right here at 39.33. But actually, you know what? Because the trend is so strong, well, I was going to say that I want to go short right here, but at the same time, I don't think that's the best idea. We just come off of exhaustion volume. We have a tweezer bottom right here. I need a break below here, or at least a pullback to higher prices before I start shorting. I still believe in a short trade. It's just too much risk towards these lows down here, at least for me. But you know what? It's a strong trend and momentum day, so anything is possible. And just based on that line of thinking, it makes me really want to take the short trade. So I'm thinking, if I did go short, where would I put my stop? It would probably be up here at 34, but at the same time, this is where I would want to hop into the trade if I was looking to take it. And in those situations where you know the trend is going down, but you can't get your order, it's a very challenging time, because you have to decide whether or not you want to be aggressive or if you want to stick to your rules. Because if you're aggressive and it works, you say, oh, see, I knew it. But if it doesn't work, you'll tell yourself, man, I knew I should have been patient. So in these situations, I just sit to the side, let the market do what it's going to do, and give me a more clear signal later on. Because see, you don't have to take every signal the market gives you. There will be all types of quality in terms of what you see. It'll be high quality, low quality, mid quality, A plus, B plus, C plus, everything on the spectrum you'll see throughout the market day. Now it's up to you to determine which ones are higher quality setups based on how you trade as a trader. So look for what you like, and that's all I'm doing today. I'm just looking for what I like, and anything else, I'm throwing it to the wind. I'll let somebody else take that trade. It's not for me. And I like days like these where you know where the trend is going. You just have to be patient and sit around and wait for your best shot. I think it's definitely a little bit more room for this pullback to run. So far, we've seen the bulls come out with a lot of momentum, but the sellers are undoing everything that the bulls try and do. So that's a good sign. The sellers are definitely still in the market. Bulls are trying to do a little bit of something, but let's see if they can continue. Because if the sellers can undo everything that the bulls just did on this one candle, then it's not looking good for the buyers at all. Now let's see how this candle closes. We have about 20 seconds. It looks like prices want to move higher. Let's check the 5-minute. We always want to go back to the higher time frames to kind of see what's going on the longer term, bigger term picture. Yeah, on the 5 and the 15, I see nothing that says over the long term prices want to continue moving up. So we'll let this pullback right here that we're seeing, well, excuse me, not a pullback, it's a retracement. We'll let this retracement that we're seeing, we'll let it play itself out. When we see volume start to come back in again, indicating that this retracement has exhausted itself, usually happens at a key level of resistance, then that's when we go short and we take prices at least back down to this low that was made previously. So we saw a little bit of high volume right here, but I'm not quite sure if that's enough to consider it exhaustion. We still have a little bit of room to go. But notice how we came up to the top of this wick and we sold off hard from it, at least temporarily. It depends on how this candle closes. how we want to necessarily look at these two candles and how they relate to each other about 2 seconds before they close. Now, based on what we're seeing, it's going to be a strong close. So the bulls still have a little bit of room to run in this market. It looks like they're trying to come back and test this level that was created before in the pre-market at 39.38. And technically speaking, that is a V pattern reversal. And we had a double bottom down here. That's a good sign. So the bulls, they're not dead. They're here. They're in the market. Right now the trend is down though, for sure. So once again, for my buyers, we're not really looking to go long until either we get above 39.38, or if you want to be conservative, above 39.41. But the bulls are making a nice move now. Let's see how long it can last. Looks good so far. I'm just waiting for higher volume to roll in. Once I see it, boom, boom. That's my chance. I'm a sniper. I'm looking for my shot. Pow, pow, pow. Pow, 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 pow. Just have to be patient enough to find it. Let's take a look at the Dow Jones for a quick second. Oh, now I understand why the S&P is moving up. Because see, that's the thing about the correlation between these pairs. They move in tandem so much. Even on days where we think that, okay, they'll probably go their separate ways just for today. They don't. The Dow Jones, it started off moving down, and then since that point, it's been moving higher. It went from a low of 730 up to about 810. That's the high for the day. Nice move, about 80 points in the span of less than 15 minutes. So now it kind of makes sense why we see the S&P moving up as well. But I still think the S&P is in a little bit of a different space than the Dow Jones, just based on the price action for the S&P. So I'm still leaning towards the short side, but I'm absolutely not ignoring all of the bullish signals that are starting to show themselves on the chart. Only thing is, we need confirmation before we actually take that long trade. But right now, bulls are in control for the moment. Now let's see what they do right here at 38. Let's keep our eyes on the volume as well. When we see another exhaustion candle, that'll tell us when the pullback is over. And if we never see that exhaustion candle, then that means that this pullback has the potential to turn into a reversal. So always keep that in mind too. That's one thing you can learn from volume. That's why I love using it so much, because it tells you, it kind of gives you a roadmap that tells you where the edges of the market are. It's not going to tell you an exact top or an exact high, but it'll tell you that, hey, the high or the low for this certain period right now is probably coming up very soon. So keep your eyes open. And that's why I love volume, especially on futures, because it's an absolute number. I know when I trade Forex, the volume is not concrete. The volume only comes from what your broker has on file. So if your broker only has like 2 million customers, well, if it's like 500 million customers in the world and your bank only has 2 million, well, they can't give you the most accurate results for volume. But we'll talk about Forex a little bit later, because right now we just saw this candle right here. What's that? That's exhaustion volume occurring at a previous level of resistance, and then we saw bearish activity following that candle. So based on what I'm seeing here, I want to go ahead and put a short order up here at 38.25, and then I don't want prices to run away from me. So if they get too far down, I'll go ahead and place a market order and catch them as they're going, because I don't want to I don't want to sell myself short, no pun intended, on this trade. I want to get everything that I feel like I should. I put my target down here towards the tops of these wicks, and boom. So I'm glad I didn't take that market order for the sell, because the order we placed up here at the top of this area at 38 has gotten filled. I don't like how it's moving towards my, okay, so we're stopped out on that one. So that right there is an indication to us that even though we did see exhaustion volume, we might have been a little bit early trying to go against that movement. So that tells us a lot. That tells us that the bulls are definitely in control. And you know what? If we're looking at the Dow Jones, we can see Dow Jones just made a new high. So we have to definitely lean towards the long on the S&P. We're getting back up towards the top of this zone. So remember what I told you, if prices break above here, we're definitely looking for the long trade. But until they break, we still have to respect the sellers. But the sellers, if they're going to step into this market and push it back down, this is when they need to do it. If not, then I think it's over. Bye-bye to the sellers. But we see that we have higher exhaustion. Well, I can't even call this exhaustion volume. This is really just average volume for today's session. These volume bars that we're seeing down here. So looks like the average so far on the high end has been around 4,100 contracts. Look at the box up here in the upper left corner, this one right here, and that'll show you the volume. So this candle was about 4,000. Same thing over here, 4,100. Same right here and across the board. So that's actually average volume. So volume breaks above 4,100 contracts on one candle, then we can consider that exhaustion. Dow Jones is pulling back. All right, so prices are continuing to move up. Once we get the break above 39.40 and we make that first higher low, we are all good for the long trade. These wicks are interesting. It's telling us that the buyers haven't been able to really push it past 41. Remember what 41 is? That's the top of that resistance area that we've been looking at. So if I take a short trade right here, I'm definitely a little bit aggressive. But I like what I'm seeing off of these 3 wicks. And sometimes if you catch it at the top, your aggressiveness can pay off. So I'll go ahead and take a short order right here and put my stop slightly above this consolidation zone and look to take prices back down to the original price target that I had it at the tops of these wicks down here at 39.33. So let's see how this trade plays out. So far we're doing well. We're in the money. We're in profit about almost 1 3/4 of a point. So let's see if we continue to move down and make lower prices. I think I'm about to get out if prices break back above my entry, because I want this to be a short trade that works out and puts me in profit immediately, because that tells me that I was accurate about my prediction. But if not, we still see that prices can be making a breakout retest on this level that they came from before. Notice how they pushed past it and then they came back and tested it. So if the short doesn't work right now, we get out of it quick, fast, and in a hurry. Come on, sellers. I see you trying to step back in, sellers. Go ahead. Don't be shy. Push this thing back down. Let's go. Let's go. I believe in you, sellers. Let's go, sellers. Let's go, sellers. Come on. You got it. You got it. Come on. But we have made lower highs, technically. Coming off of the tops of these wicks, we pull down, we push back up to this area right here. That right there, even though it's minor, is a lower high. A lower high is a lower high, whether it's major, minor, big, or small, in every market. So we'll see. We'll see. What's the Dow Jones doing? Potentially making its way back up. So I wonder what that means for the S&P. Now notice how I said potentially, because this area right here is definitely a demand zone. So prices could bounce from this level and continue to move higher. But if you look at the way that prices have bounced back down from this level, it's not promising. That's a V pattern reversal. You don't want to see your pullbacks move like that. You see how it's a V right here? That's not a solid pullback. You want your pullbacks to be more of the diagonal type, not where it moves straight down against you. That's not a good thing. So we see the same thing happening on the S&P if we pull up the line chart. It's more of a V for the pullback. That's not what you want. Not at all. So we'll go ahead and hold on to this trade. When we get up by 3 points, so when markets break below 39.36, we'll move our stop back to break even. Until then, we'll let this trade ride and see what happens. We see higher volume on this candle right here, and then we see a long tail wick to go along with that higher volume. So that's interesting. If this candle finishes green, then that could be a signal that maybe buyers want to step back in. But if we break past this wick, that's definitely a sign that the sellers are still in control, even though we had a little bit higher volume on this candle right here. So let's see how these two candles finish out. We have about 25 seconds until this candle closes, so anything could still happen, but I'm leaning more towards the short side. Prices have just hit 36. Once they break 36, we'll move our stop back up to break even to protect our position. So we haven't had to get below 36 quite yet. We need to close below it. So look at that. Yeah. I was about to get out, but you know what? I'll move my stop to break even right now, because this could potentially be a pullback for the bull. So even if it is, I want to make sure I protect myself. I don't think it will be, because I see what the sellers are doing, but you always want to cover both sides of the market. Yes, we are short, but we always want to protect our risk for any losses that could potentially happen. That's always the name of the game. Mitigate your risk first. Worry about your profits later. If you do it in that order, you'll be successful more times than not, because risk is simply defense. For all of my people that play sports out there, what do they always say? They say defense wins championships. Defense leads to good offense. So it's the same concept with trading. Defense is your risk. That leads to good opportunities on your reward side, because if you control your risk, for one, you'll have enough money in your account to go big with size when you see the order or when you see the setup that you like. And two, if you have capital in your account, you maintain confidence, you stay level as a trader. Not only are you coming in taking the best setups, but you're coming in with the best frame of mind for being successful in the markets. And that's what it's all about. So let's just let our trade play out. Let's check the 5 minute. On the 5 minute, it looks like one of those scenarios where prices come straight up and then come all the way back down to where they once originated from. Now, I don't want to take it all the way back down there because that's asking for a lot in this market. Based on the way the markets are moving, it doesn't look like it wants to make a move like this, at least not in the time period that I expect it to. So we won't force it. We're in an interesting position where buyers and sellers have to determine whether or not they want to take control of the market. We haven't really seen either side be able to say, yes, we have control. We've seen both moves by the buyers and the sellers. Sellers started the market strong. Buyers came back in. Sellers took back over. And that's what we're seeing right now. Okay, 3 people in here today. Thank you, thank you, thank you. I appreciate you guys for tuning in for sure. Thank you, thank you. I hope you guys are learning something. If you learned anything so far, drop it in the chat and let me know what you've been picking up on. I know it's a lot of info when it comes to trading, and sometimes it can be really tough to navigate through it. And I hope that coming to this stream can help you just find out a little bit more about the markets. You know, you don't have to learn everything here, but I want you to learn at least one thing, just one. Come on, market. You know what we'll do? We'll do what we did yesterday. Yesterday, when we were in a trade and we were waiting for our prices to get hit, we went over and looked at some other charts. And it seems like when you look at other charts, whatever chart you were trading just starts moving faster. So let's see what's going on the stock market side. Ooh, ARKK, one of my favorites. I'm looking for better entry prices over there so I can get some good money from that. It's all about patience in any market you trade, whether it's the futures market, the stock market, whatever. A chart is a chart. Regardless of the name behind it, the same concepts always apply. Patience, good entries, and confidence will always make a world of a difference. Apple. Okay, Apple. Down a little bit right now. That's good. When my stimulus check comes, hey, I'm thinking about buying some Apple. I might just put the whole thing into Apple because I just want to park my money somewhere where it's safe. I know that if I look back over the course of a year, so March 17, 2022, this money that I put into Apple, I have confidence that it should still be there and it should be a greater amount and the prices should be higher than what they are right now. So that's what I always look for when it comes to stocks in the market. I want safety and I want returns. And I guess that makes sense because, like I tell you guys, I am a slightly conservative trader. Nothing really is making big moves today except for Plug Power. I don't know if you guys follow that one. I've been on that since 2014, back when it was at $7 when it had that first initial move. Okay, so boom, there we go. As soon as we step away from the charts, that's when the market moves. That's interesting. So we see that prices came back up and we were stopped out for a break-even trade, which is all good. Because imagine if we would have kept our stop where it was, we would have still been in the trade. So never mind. Oh man, don't do this. So I'm wondering if I should get back into this trade. We have seen a double top, but also a double bottom. So I already took a loss trying to short from here. If I take a short here, I'm definitely being stubborn. But I like what I see, so I will. Put our stop back where it was. Put our target back where we had it initially at 39.33 towards the tops of these highs down here from this previous bottom. And we'll let it rock out from here. I still believe in a short trade. The buyers tried to come in and do a little bit of something. I respect that. That's why I have my stop up here at the tops of these wicks. I like that trade. I do. So, same strategy. We'll go ahead and click over. We'll actually look at the Dow Jones. Oh yeah, this thing is moving down. So That means the S&P should be following suit, which we see so far is turning out to be accurate. Now, the only thing is we need prices to break past all of these wicks. Once they break past here, there's really no major support to stop them from moving lower. This is the only thing holding up the market right now. And as we can see, it's holding up the market very well. So anyway, we'll go back to looking at other things in the market. Ooh, Snapchat. Now, Snapchat has surprised me because it used to be kind of iffy like back in 2018. And I stopped paying attention to it because if you see back here, it was really just in its beginning stages. But then in 2019, it hit $5. Ever since then, it's been up, especially since the pandemic. Imagine, I mean, it makes sense if you think about it, because what are people doing? They're at home, they're on their phones even more than they've already been. And mind you, people are already addicted to their phones. Now they're even more addicted. So yeah, Snapchat, they've been doing numbers. And it's still relatively cheap, about $60. So catch it before it goes to 100. XLF. If you guys are looking for safety, you can get into XLF. That represents the banking sector. Banks. Is a bank going out of business? Is JP Morgan going out of business anytime soon? I don't think so. So you want safety? Banks for sure. Okay, back to our chart. Still looking pretty good for us. We'll give it time to run. Right now it's 10:03. 10:03 and 35 seconds. So we'll give it a minute and a half. So at 10:05, we'll go back and we'll see what happened. What are some good stocks I want you guys to take note of? Let's go to my red list. Oh, I know. Wide Open West. Now, I've been doing analysis on this company since 2017. I had this assignment in college where we had to pick an IPO and just do a research paper on it and research the company in great detail, and then put together a presentation as to why our classmates they're supposed to be our investors, whether or not they should invest or not invest in this company, and then give out the reasons and present it all in a cohesive manner. So since that time, I've been following Wide Open West. They're basically a cable company, but they're not a major company like Comcast or DirecTV. They're mostly in local markets on the West Coast. They're heavy a lot in California, Nevada, Arizona, New Mexico, Colorado, states like that. Hence why the name is called Wide Open West. And they make cable, and their competitive advantage is that they have fiber optics that are just on a whole nother level, super fast. Only problem is that they have bigger competitors, and they need to make more money so they can continue to improve and get their fiber optic cables in more locations. So as you can see, over the past few years, or at least since the pandemic hit, Wide Open West has been nicely moving to the upside. And right now we're in a pullback. So if you're looking for entry points, hey, there you go. And boom, there we go. Let's go. That's what I like to see, baby. All right, that's good. That's good right there, man. If we can just get the chart to line up the right way. Just come on, chart. There you go. There we go. Okay. So cool. We did what we were supposed to do. We came in, we read the market. We figured out where exactly it was going. We knew that the overall trend was down. So what did we look for? We waited for prices to come back and test major levels of resistance. Once we saw the bounce, we went short. Now, because our stop was tight, we came back. We got stopped out at break even. But I came back in and said, hold on, man. The market has not changed. The trend is still down. So I hopped back into my short trade. Put my stop the same place it was before. My target the same place as well. Prices came back and initially hit it. So I like that. That puts us in profit for the day. We are up. That's all I wanted to do, man. I wanted to come here and just simply get my groove back, get into the right flow of things in the market, get my head on right. I appreciate you guys for tuning in and doing that with me. And I really want to just give you a big thanks, because trading on the stream with you guys helps me a whole lot. It keeps me accountable, because the DMs that you guys send me on IG, I see all of those and I appreciate them. And I love you guys as well, because y'all keep me focused. And I hope I can do the same for you in some way, shape, or form. So I guess that's the trade-off for us. I give you knowledge and live trades. You give me accountability and confidence. So I appreciate you guys for rocking with me today. I will be back here on Thursday tomorrow, 9-10 a.m. sharp. I'll be trading the open later on today. I'm thinking about whether or not I want to go live and stream, but I don't think I will. I have a little bit of things to do in the afternoon, but I will be here tomorrow, 9-10 a.m. and then once again tomorrow again at 9:35 p.m. Bison Trading Show on twitch.tv. The link is down below in the description, so make sure you head over there and watch yesterday's class if you weren't able to get a chance to check that out. We dropped some good knowledge, especially on dollar Swiss and Bitcoin. So make sure that you follow me on YouTube, follow me on subscribe on YouTube, follow me on Instagram. And no, hold on, you guys, I'm not done yet. You know, one thing that we have to do, we have to download what? We have to get that position history always. So pull it up. Remember what I tell you guys, position history is simply keeping track of all of your trades. So here's what you do. All you do, go over here to your profit and loss, copy it, bring it back over to your chart. And once you bring it back over, go over here to the profit and loss column, copy and paste it, create your profit and loss chart, and then import your screenshot from your platform. So let's go ahead and get our screenshot while we still can. So boom. Now what I like to do, I like to use this app called Snipping Tool. I know it's on Windows. I'm pretty sure it's on the Mac as well. It allows you to take screenshots of whatever is on your screen at that time. So boom, we take that, we save it, we put it in our chart folders, we catalog it. Boom, we save it, and then you take this, you export that to your Excel sheet, and then you go through, you figure out, you look back at your screenshot, figure out what you did right, what you did wrong throughout the day. Whatever you did right, put that under accolades. Whatever you need to improve on and you need to work on, put that under the improvements column. And then that'll give you a focus for when you go into your back testing sessions. And also, if you don't have that Excel sheet, make sure you email me at bisontrading2018@gmail.com. Once again, that's bisontrading2018@gmail.com. Make sure you check out my link tree. You can find the link in the description below and on my Instagram page as well. And with that being said, man, I appreciate you guys for tuning in. It's your main man, Ty Trades Futures, checking out for another great session, man. Thank you for rocking with me, and I will see you guys tomorrow, 9-10 a.m. Eastern Standard Time, live and direct. Be there or be square.